Hello everyone, welcome back to Lab4crypto. In today's video, I'm going to expand a little bit on the article that I wrote yesterday, 20 hours ago, which also if you want to receive it for free in your mailbox, just put your email here and you will receive it as soon as I publish it. But I wanted to expand a little bit on the point that I want to make in the article, and of course, I'm going to touch on the correlation of Bitcoin and global liquidity, what I think the next couple of months will bring to Bitcoin and the crypto market in general, and also speak about the next moves from the Fed, about the next interest rates, how this can affect the movement of your portfolio and why it's crucial for you to look that. But let's move to the article, which basically is going to be my guide through this video. And if you have any questions also, do not forget to leave a comment and I will be able to reply as soon as I can about something that is of your concern. So let's move. The article basically is about Bitcoin's next big moment and why I believe the crypto market is primed from a breakout, but the macroeconomic factors needs to soften a little bit to allow Bitcoin to move to higher valuations. I'm going to explain in this video what I mean. So let's go directly to my point, which the first point is that right now global markets are basically grappling with maximum uncertainty with tariffs, macroeconomic headwinds. For example, the Fed seems that are not willing to also cut in May as the market was initially projecting. So now the most likely scenario is for us to have the next rate cut on the 18th of June, which if you read the report of the Fed, actually is not that surprising, but because the markets crashed, the stock market of the US, people thought that Fed are going to step in. And if you watch the latest interview of the chairman of the Fed, he basically said that the economy is fine. They are watching the unemployment rate. Unemployment rate is at levels which basically it's maximum employment. So they want to not rush and start reducing rates or end quantitative tightening, although they have reduced a lot the magnitude of the QT that they were doing. And that was something that I explained in a previous video. So let's go directly to what I'm seeing just from the data, because there is one aspect which basically I'm calculating the probability of Bitcoin moving to higher values basically on the data that we have. And as you know, when you are adjusting your risk tolerance, first you need to check what the data is saying. Also, for example, if you are in altcoins, many times I tell to the people when they go to the lower caps to also check the liquidity risk and then move to the geopolitical risk. Of course, if you are in Bitcoin, you don't have the liquidity risk, but you have first, the risk if you are in overheated region, which that means probably the market is going to move downwards. And of course, the geopolitical risk, which is something you cannot control, but from the sentiment of the market, and also if you read carefully what key people are saying, you will be able to gauge what the geopolitical risk is, because unfortunately, when you have now negotiations, none of the parties that are negotiating are going to tell to the market what's going to happen. Therefore, you need to estimate if they're going to come to a deal fast or they are going to prolong it. Therefore, it's crucial for you to adjust your risk tolerance and not just rely on one factor when you deciding your next move. So basically only on the data, I said in my previous article again as well that Bitcoin is in a very good, let's say, spot, which the risk now currently is at 31.3%. Recently, we were at values of 29% when Bitcoin was 77.9, which if you go and expand this graph, you will see that historically when we are at these levels, and if you are in a bull run, that means that it's a very good time for you to consider accumulating BTC. But if you are in a bear market, that means that you can go to lower risk values. And the question that you need to answer to yourself is that, do we going to move to a bear market, or we are still in a bull run? Personally, I still think that we are in a bull run. None of my go-to indicators flashed that we were overextended. Only briefly we had that the risk metric was flashing that we were in a high risky region when Bitcoin was at 97.98K. Let's say the risk was 76%, which of course it's good to exit and take some profits here, which is something that I did. But we are nowhere near. Let's go and check the deviation, for example, from the power law. Indicators that flashing that this was the cycle top, because you can have local tops, but it's a different story for a cycle top. And as you will see that usually we tend to deviate a lot from the fair value of Bitcoin to start considering that we have reached the cycle top. And the maximum that we went recently was, let's say, 18.9% deviation from the fair value of Bitcoin. And usually we want to see values greater than 70% to start thinking that we are in this region. There are many indicators that I can use to make my point, but they're going to come to the same conclusion. You can have thousands of graphs that you can use daily to see and adjust your portfolio tolerance, risk tolerance. But the main point is here that many other also indicators that I'm using, they are not pointing to a cycle top. And this is basically the ultimate question that you need to answer. Because if we are still in a bull run, that means that we are in a very attractive region to start making moves. If not, then you need to even scale down and reduce your risk by exiting the market. So let's move to the article. Yeah. Next, the most common question that I get all the time is why I'm focused on the USA market and not to other markets as well, because crypto is global. And what I say to most people is that first, that US is the biggest economy if we want to calculate that based on the GDP. And also there is an important image here, which basically says that most Bitcoin holders are in North America. And just for comparison, 10.7% of the 4% worldwide, that is the estimated number of people that own Bitcoin. From that 4%, 10.7% is in North America, and only 3.4% is in Europe, which is another strong economy. If you combine all the countries together, basically it's really close to US. So that is why it will dictate the movement of Bitcoin if, for example, people in the US are feeling that the economy is in a better position, and therefore, as Bitcoin is still acting as a risk asset, is not like gold, which is risk off, people are going to move to Bitcoin when they feel that the economy is in a good place, and that is why the tariff talks are important. So moving forward, I wanted to show to people that Bitcoin is, first, we need to check what Bitcoin is going to do to know what altcoins are going to do. That is why I'm most focused on Bitcoin now, because if Bitcoin does not set the stage for altcoins, the likelihood of having altcoins moving to higher values without Bitcoin moving to values above 100K, personally, I think that the probability of that happening is almost zero. That is why you need to first focus on Bitcoin. And if you want to increase your risk tolerance when you have indications that we are in an altcoin season, for example, just using the altcoin season index, and when that is showing that altcoins are starting to outperform Bitcoin, then you can go there. But for example, now we are deep in Bitcoin season. So when this red line is below the green one, that means that Bitcoin is outperforming the top 50 coins in the crypto market. So it's like clear um, view of the current state of the market. So do not overestimate the power of altcoins. You just need to be patient. I still believe that we're going to have an altcoin season, but not when people want the altcoin season to come, but when the monetary and fiscal policies allow that to happen. Going back, you will see that addresses that holding more than 1000 BTC, they are keep accumulating since January of 2025. And that is important for you to know when you see people that own significant amount of Bitcoin, which they were able to enter Bitcoin when no one was believing that BTC was a thing. These people tend to understand the markets, and also because they have significant amount of in dollar-wise value in Bitcoin, they tend to get the market movements well. And when you see whales accumulating, that is a sign that they are expecting to have higher values. So this is one parameter also to add, for example, to the risk metric and also other metrics that we have. But the point is that things are looking good for Bitcoin, but we need a spark that will allow Bitcoin to move to higher values, and that either is going to be a deal in the tariffs or the Fed starting to signal that they're going to start boosting the economy, the US economy, to allow to people to increase their risk tolerance. An important graph that I'm going to show in a bit is the comparison between Bitcoin and gold. But first, I wanted to show you something, which is the golden and death cross. So recently, Bitcoin had a death cross, which what death cross is basically when the, let's go to, here. So when the 50-day simple moving average crosses below the 20-day simple moving average. So in short, when you have the orange line crossing the green line. So when we are in a bull run, that usually it's a 2 months period where we're moving sideways. And therefore, if you want to get a confirmation that things are moving to the upside, when you're starting to see this orange line moving above the green line, which is the golden cross, you can allocate if you want on BTC when you get a confirmation. But, and that strategy is going to protect you if we are in a bear market, because of course no one knows, and we will find out in the next 12 months. But for example, if we are in a bear market, you will see that, for example, like, let's zoom, for example, like in January 2022, when we had the death cross, the market was moving to lower values. And if you thought that here was, again, we're still in a bull run and therefore we're going to move sideways, and when the orange line started to move upwards, that means that we're going to enter a golden cross, therefore you want to front run the market, you saw that, for example, if you accumulate at 44, Bitcoin went all the way down to 16K. Therefore, it's important for you to know if you are in a bull run or in a bear market. And that question is either going to help you a lot and sleep better if you are willing to take the risk and allocate, for example, in this region, the 2-month region, that the market is going to move upwards, or you can get and wait for a confirmation that we get a golden cross and then move to higher values. So I believe that we are in this region personally, but no one knows, as I said. So you need to be prudent with your portfolio allocation. Now, this graph basically is telling us that also Bitcoin Gold is following a power law. And what that says is that when you see this blue line going down, that means that gold is outperforming Bitcoin. And when this line goes up, that means Bitcoin is outperforming gold. So currently, what we can see is that Bitcoin gold ratio is touching the black line, which is the -2 standard deviation. Historically, when we touch the, um, the black line, that means Bitcoin is expected to start outperforming gold in the foreseeable future. No one knows that when it's going to happen, because sometimes only takes a couple of weeks, sometimes takes months, and so on. But the point is that usually we're following this black line, with exception of the beginning, because as Bitcoin was much more speculative. But for the last 10 years, when Bitcoin was touching the -2 standard deviation line, it was a good time for you to start considering thinking that Bitcoin is expected to outperform gold. And as we know, gold had a recent rally. Gold reached consistent all-time highs. And that partially, in my opinion, also is driven from the Chinese market, because we know that Chinese citizens like gold compared to other assets. And when we have this uncertainty with tariffs between China and USA, for them it's safer, for example, to allocate some of their capital to gold, wait to see and get some clarity, and then move to more risky assets. And that actually makes sense. But if, for example, you want to increase your risk appetite, you can start shifting, for example, to BTC. But that is something that you need to decide based on your portfolio tolerance, risk tolerance. I'm sure you saw this graph a lot lately, which I have it here. Let's go and see it. And this graph, in short, which is better to see it in a monthly chart, because do not forget that many countries publish their M2 in a monthly basis, with some exceptions with USA, which is weekly. But let's get the main idea. The main idea is that when the M2, so when the money supply is increasing in the global spectrum, assets like Bitcoin, risky assets, tend to perform really well, which is not only risky assets, is generally assets, for example, like gold and like stocks. But Bitcoin, as the main candidate to be the replacement of gold, is good for us to see how it performs. And you will see that this is the price of Bitcoin, the candles, and the yellow line is the M2 money supply. And what you will see is that now we are in a point, we are signaled the bottom of the market based on the M2, and now we need to start seeing this upside based on the M2 money supply, because there is, let's say, a 12 weeks offset between the money supply and Bitcoin price. So what you can do, you can just shift this line, and what it will do, it just is going to give you an indication where the price of Bitcoin is going. And there is actually high correlation, more than 70%, of Bitcoin price action with M2 money supply. So in short, when this is going up, 70% of the time, you will expect that Bitcoin will move higher as well. So it's remaining to be seen if in the next couple of months we'll see that upside. And I think the probability is high, even if we're starting to get some news that the tariff issue is starting to get resolved. If we get some news between Japan and US, if they get a deal, that will set the stage to have more countries coming in, and eventually have these tariff wars behind us. If we go back to the article, what I said to the people is that Bitcoin, in my point of view, is performing really well in these ranges. So S&P 500, for example, I think is like 9% down, and Bitcoin is like 10. Yeah, how it's yeah, correct. So we're performing really well. And if we get some good news from the macroeconomic, let's say, landscape, that will help us a lot because we know that China is already printing. We have major economies boosting their economy. For example, the Europe has reduced their rates a lot compared, for example, to to the US. If you go and check the interest rates, example, you will see that Europe basically it's wait, sorry, is at 2.65, and if you go to the US, we are at 4.5. Therefore, US has a tighter economy now, and rates going down is important because that will allow to new companies starting to boost the economy by creating new jobs, by taking loans, the mortgage rates starting to go down. And generally, that is why the market is so fixate on what the Fed are going to do. But sometimes we are front running ourselves and we want things to get done immediately. And what I say to people is that also regarding the tariff wars, you don't expect, for example, the US starting to say something really good about the the progress of the tariff wars if they do not have at least the majority of the deals already in place, because they're going to use their leverage, and that is vice versa as well. So also, as this administration basically was saying that they are focused also in tax cuts, which is really important. And do not forget, if the tariffs are going to go down, it's like the taxes globally are going down because it's going to be easier for you to trade. They're going to have a boost in the economy that will reflect it on assets, which is something that I think I'm going to write in the next article. But the main point is that you need to sometimes be patient, because doing nothing in a market for a couple of, let's say, months is still a position. People always want to take immediate positions on something, and sometimes it's not good because, as I said, either you're going to think only, let's say, the data risk, the math risk, however you want to take it, which say that we are in a good place, but you cannot calculate the geopolitical risk. And that is something that you need to have in consideration, because if we didn't have that risk, based on what I'm seeing on the data, it's an amazing time to start building a strategy and entering the market. But if, of course, that is not a financial advice, but if you think that it's going to be a bad outcome from tariffs, you need to step a little bit back, check your portfolio, adjust your risk tolerance, and be patient, because always things are going to be resolved, but depends on your time frame. If your time frame is more than 12 months, I think things are going to resolve themselves. But if your time frame is 1 or 2 months, then you need to sit down and adjust your portfolio percentage to safeguard yourself if something goes wrong. So I urge you to also read the article, which it's I think will get some value from it. And of course, consider to also enter our platform, check our graphs, speak with people and us in Telegram Premium, which we lay down our ideas, our moves, what we are doing, and that might be maybe help you make your next move and adjust your risk tolerance and help you see how we see the market. So I hope you like the video. Please give us a thumbs up, and until next time, bye bye.